Good evening. This is the Elliott Wave update for the NASDAQ 100 for Tuesday, October 26th, 2021. Another interesting day in the markets with the NASDAQ barely, almost making it to new all-time highs. It reached a high today at 15,701 and then proceeded to sell off $200. Reaching 15,503 before beginning to rally again. Now, what happened and what does it look like and where are we? Okay, so using the hourly chart, I had left off yesterday saying that we had completed. So right now we remain in the process of putting in a minor C wave up. Within that minor C wave, we need to see and count 5 waves of minute degree, of which we have done wave 1, 2, 3, 4. That left us in wave 5 of C, and that wave was subdivided. Now, so I had 1, 2, let me just open this up a little bit so we can all see it. We had 1, 2, and then likely 3, 4. With the 5th, also starting to subdivide and zipped up today. Now, I want to drop this over to a line chart because I need to make clear what actually happened up here and what that means to the overall count. So we got up to 15,701, but this all closed on an hourly basis at 15,668. So I need to go back out, change it back to a candle, and then I want to look inside these bars to see what did actually take place. Boom, we went up twice and tested. Well, we went up once to 98, dropped back, and then ran up to 15,701. That, I believe, completed minute 5 at 15,701. Now, if I'm going to label it, I have to leave it tentative. The market did a pretty strong sell-off right off that high, but has not really broken down below levels that would give us stronger support to that high being the end point for this intermediate B wave. Now, it didn't move to above to start creating new all-time highs. So I leave this open, but the market has a whole lot more to do now to show that it has intent. Because did this break the back of the bullishness? Did this kind of crush the exuberance that's been in the market for the last 3 weeks? I don't know. We did get additional earnings reports from AMD, Microsoft, and Google. Google initially went up over 2,800, then sank back down to 2,700, and now has recovered back to really just being down like $25, $26 from that closing price at 27.86. AMD zipped up to 125, 126, now is actually down a little bit from the close at 122.93. Microsoft closed at 310, ran up right to this area again, and then it came back down to 310. Now it's running back up to 315 to 316. So that is going to keep our futures market a little bit active as now we continue to digest these earnings and the post-earnings conference calls where they issue forward guidance. And either it's going to be positive or it's going to be negative. Right now, it does seem that Microsoft is putting out a little bit more, that where the bulk of their strength is coming from is the growth in the cloud services that they provide. And that's very interesting because that is a very important part of today's markets, particularly technology-wise, and for storage and for doing business. It is a big part of Amazon's. Amazon Web Services is a constant revenue producer for that company, along with their core businesses, but that's become one of their core businesses. It's the same for Microsoft. It's the same for IBM. IBM didn't do such a good job this time, but Microsoft is now leaning on that. So we're going to be up about $6 in Microsoft, and that's not a bad thing, but how can we balance it out against everything else that we're seeing, against the selling that we saw today? So what are we kind of putting in here? If we take a look at what the market is now doing as we come into the start of Globex, it's not getting above that high at 15,594. So let me go down on one little bit lower. So we need to really take a look at this, open it up, and be able to see. Right now, 1, 2, 3, 4, 5. Looks like 5 down on the 15-minute chart. I still need to count it on the hourly chart in the same fashion. But 1, 2, 3, 4, 5, ABC, 1, 2, maybe. So does this all turn and we just now continue to go lower? We break below the 15-minute 200. It's going to throw things back into a negative. That's where it stopped before. On the initial whip lower off of making that high of 15,701, it dropped to 15,003. 15,503. That's quite a drop. And against, nobody's reported earnings yet. So this is just all on its own because Facebook had turned sour. And so that really started to drag everything down. And Facebook is still quoted up a little bit. Now, actually, it's quoted down as we started to the Globex session. So, you know, there's a lot of information that needs to be digested and needs to be put back into the market or taken out of the market. So, but right now, this small little Elliott view is not suggesting that we're just going to bing and just start to recover and just we're heading up. We love everything. Yes, that kind of is what is happening right now. They pushed it back up 5 after being down, but it has to sustain it. It has to build on it. It has to get itself back above 15,600. And it has to do it pretty much without any trouble to really enforce that, okay, this is an A, come on, A, B. Now we're going to do a C wave up, which will bring things hopefully back into focus. But you see, it just doesn't compare. We need to start producing 5 waves up, not just a C wave. We need to put a bottom in and start another impulse move up if this high and this all-time high are going to be broken. And we are going to continue in this B wave. A lot of proving to do. So I'm actually not real enthusiastic, but as I say so often, stranger things have happened. So cannot declare this over yet. I believe that I'm going to likely put a 5 there, but I may put it in parentheses. And if I'm going to do it right now, just because that's right. Edit property wrong. That's not going to work. Not editing properties. I'm putting a new one. I'm going to add a drawing. Come on. And I'm going to put parentheses around this 5. That means it's not firm. So, and I got to influence, and I have to really stress that because this NASDAQ, we've witnessed now more times than not that it'll just turn around and do what it wants to do and prove everybody on the planet wrong. And that still can happen. It's not. Well, actually, I'm going to leave it in italics because that makes it also that it's not. So for the market to prove that we're going to do upside, then it has to establish the low, and it needs to start building a 5-wave structure up, but it not in the form of a C wave. So if it stops here and turns and starts to just move higher from here, it's going to be a C wave. See? Unless this somehow turns into a 1, 2, and now we're going to start a third wave up and a 4 and a 5, which would then leave this as 3 waves. A lot of proving to do. A lot that the market needs to show us before. So what is my recommendation? If we start to move lower and we break the hourly 50, that will add an additional round likely of acceleration down, as kind of happened when we broke the 20. It forced an additional 50 points drop. So it did get nasty and got nasty. If we're now being held by that 20, trying to push ourselves back up. So a break there begins to really just line things up a lot differently. We still might have to be able to count this as corrective, but corrective of what? If it comes down and finds support in this 4th wave of one lesser degree. But it's not, to me, it's not bullish. It would be a bearish move down if on support here. So a break there would push Elliott to this level. That was where the Elliott support would come in. You might find some here, but more here to here. Now, if it gets down there, guess what? It's breaking the hourly 200. Not a good thing. And also what should be supported, 15,314. Not a good thing. Then we're starting to produce probably 5 waves down. On the hourly, that's going to hammer tight that high. And the end of the B wave. Now I want to go up one more to just demonstrate what possibly is in the works here. Now I have been counting this as an intermediate A wave, an intermediate B wave with the possibility of becoming irregular, which still exists. I'm going to give it that. But if it doesn't break that high, this could go back to being intermediate wave 1, intermediate wave 2, and we begin to drop in the 3rd wave down. I can leave it ABC as well, but it didn't break, it just went up. So a wave 2 can equal that. And the characteristics and the personality of a wave 2 also fit perfectly. It is just a switch of attitude in the market. If this was, and if we were moving higher, that it would be just a total rejection of that first bullish wave 1. But right now, this would be a bearish wave 1. So that wave 2 is a rejection of that first leg down. But guess what? It didn't exceed the high. So it gets left a wave 2. Now you get a crushing 3rd. Possible. Just putting it out there. Not changing any labeling. I'm not even going to put this back into a wave 1. I need more from the market. But what would put a lot of support in that direction would be if things started to accelerate and we just started to slide lower. But that may not happen until after Thursday. We still have earnings reports to take a look at, or the market needs to take a look at and digest and make clear what forward guidance is going to look like. So where am I going to leave it? We need to continue to trade smart. We need to continue to trade what's in front of us. We need to not take a position of bullish or bearish. We can be for the day. We can look at trends and we can recognize that the market is bullish or bearish. But I don't want to be bullish or bearish. I want the market to tell me what it is for the day, not me, what it is. That leaves me open to continue to interpret either direction. I need to be open for either direction. And today, I'll tell you, you needed to be open to either direction, because this, when it started, was like, okay, it's just a pullback. It's just a pullback. It's just a pullback. Oh my God. I'm just blowing out my account because I held on to a long position thinking we're going to go up and break that high and continue. And it didn't. So being bullish when the market was telling you, oh no, we're not anymore. We're now being more bearish. We're now going to take it down. And we're breaking moving averages and levels that we shouldn't if we still wanted to go up. But if you didn't recognize it, you continue to try to play it as if you're being bullish on the day. The market did start out that way, but then it changed its mind. And if you don't, you lose. So this becomes important. Our own mindsets become important to how we look at a market. I can't tell the market, you got to be bullish, you got to be bearish. I'm not big enough and I don't certainly have enough money. But I can go and say, NASDAQ, you are the market players are telling me it's bullish today. That leaves me open to accepting either position. Okay. Then I can react accordingly. Then I'm not even going to be married to the downside. I'm just going to play along. And as it breaks, well, then I know, as it starts to break moving averages and you've got the right position on, oh man, it's glorious. But if you don't, it's horrendously painful. So, moral of the story, let the market tell you. Don't tell the market. The market is always perfectly priced. So we can have upside or downside. The market needs to stop and turn and produce 5 waves up, what I just described, to show its intent that the bullishness is resuming and this is all now in and done. And our intent is to continue to move higher and to break to new highs. Or we need to remain open that the market's not going to break above 15,600, but will again start to turn lower, breaking below moving averages and make clear we're in a bearish mood right now. We need to be open to both. I'm going to leave it there. We have our points if it starts to break that we can play along. We don't need to see huge declines holding on to a long position. It was very painful. Even though we had these little bursts, look what they ended up being, 3 waves. And then what happened? The next one, bam. It's just going to happen. And it broke the 20 and then it broke the 50 and it just accelerated even more. Boom, at bottom. Okay, and that was enough. That ended up being a 3. Well, not really. Didn't take out that wave 1 low there, so it wasn't. It ended up being just a part of this larger wave. That is where we get caught. But it was tradable, and man, you would have made sweet money. And these were tradable actually too. This is a 5-minute chart. You just had a 5-minute rally, but God, it's like you get out, you buy it, they run it up. What they did, they ran it up $30. That's a nice long. That works. In fact, you got even a little bit more. You got back above 15,600. That's what it needs to do again. But guess what? It failed there. So that was enough. It's like, oh, I'm out. And then boom, they just took it away. They tried it again, then it failed miserably. And then you got to the lows. Then it put in a little bit higher. But if you were losing here, this is only giving you an opportunity to make some of it back. Because look, it was 3, 3, 3. So there's A, B, and then 1, 2, 3, 4, 5, C, done, down. Now, this is presenting its own little world here. Because if this is going to end up being something like 1, 2, then this just has to go and it has to keep going. Has to keep going. There's no reluctance here. And right now, that's kind of what they're attempting to tell us. But 5 minutes, 5-minute bar. It's got to break above that 200 and it can't stop. And then it's got to break above 56 or 15,600 and it must keep going. Play according to what's in front of you. Stay neutral. Do not get caught up in irrational exuberance. Do not get caught up in panic to the downside. Use it to your advantage. Stay in the calm area, the eye of the storm. That is where there is calm. That's where you're going to be able to see it without being bullish or bearish. Don't take on that hassle as you try to work a position. It won't work. Be flexible. Be able to allow the market to tell you we're getting bullish, we're getting bearish. All right, I'm leaving it there. Next update, Wednesday, the 27th.